All right. We are back with another episode of the Real Estate Investing Club. I hope you guys are having a great week. As always, we're bringing that Friday energy to you. It is nice and cold here in Seattle, which is the way we like it. So going into fall, I've said this the past like 10 episodes. I love fall. I hope you guys are enjoying the fall because, you get those warm cups of coffee. It just makes your morning fantastic. Brian is in a different environment. He's our guest today. He's Brian Ferguson from Fermar Enterprises down there in hot Texas. So you got some different environments coming at you today. Brian, I am super excited to jump into this. Thanks for hopping on the show.
Hey man, appreciate it. Thank you for having me. And I'm a little jealous of your weather and your the coffee state over there.
Yeah, there's different positives and negatives to each one. Brian is focused on multifamily. He's done a lot of things, though. He even mentioned before we got on here that he's flipped. What did you say? It was a bowling alley, which is the first
A
time I've heard of
bowling
that one.
alley, yeah, yeah.
So why don't we start it off and just take us to your story? We always like hearing how people got into real estate and how they got to where they are today. So take us to the beginning and tell us how'd you get here?
Sure. So I started out early. I started out in the auto industry at 17, just looking for something to make some good money. And I did that for a few years. Was watching Flip This House episodes. Me and a partner that actually at one point was three of us that flipped the first few houses, turned into two of us. Still have that partner today, and we started flipping houses one, two. Before you know it, fast forward, left our jobs. Done up to upwards of a couple hundred transactions a year. We still have that division today. We'll do well over 100 transactions every year. It's between fix and flip and some other methods in there in the single family. That involved into doing some land development. Well, it involved into a ground up construction for residential. Then we started putting in subdivisions, doing ranchette land development. And over time, we ended up holding houses. We got into this 06, 07. So we went into kind of not the greatest
Tough
market.
time.
Yeah, it was, it turned into be an amazing thing because all the inventory we held, hundreds of properties we were able to sell later on down the road. Fast forward 10 years, 1031, buy duplexes, fourplexes, started selling to those 20 units and then the 100 plus units. So we did that. And then in so that was about the first 16-year history. And then in 22, just as a way to scale, dove full into syndication, started bringing in investors, raising capital, and we still do all the above. So we syndicate, we raise capital, we buy stuff individually or through our partnership, and then we still have our fix and flip division. So we do all that. We currently sit today. We have about getting right at 1,000 multifamily units, about 150 million assets under management between multifamily and retail shopping centers with a few other pieces mixed in there, like we talked about, some self-storage and mobile home.
Nice, man. Um, yeah, I mean, a lot to go into here. We've had a bunch of multifamily is a very popular asset, so we've definitely covered
Yeah,
that.
yeah.
Retail, though, is something that we don't often have on the show. And I mentioned before we got on here, for some reason, I'm intrigued by retail. I just like the idea of making a nice commercial space, having those longer leases, making a little bit more money with fewer tenants. So why don't we go into the retail side? Let's start there.
Yeah.
You guys started, it sounds like, flipping, and then you got into multifamily. What kind of brought you into the retail space? Why did you choose to invest in retail?
So we had a few commercial properties over the years because we got to a point in our market. We're in Victoria, Texas. On our market, we would we would have to expand more horizontally, that we would just buy anything that popped up. I mean, literally, that's bowling alley being an example of that. But and then so we held some of the commercial stuff. And then once when we got ready to start the syndication model and we wanted to bring investors in, it just so happened I was chasing multifamily, and we had been trying to chase another big deal. But this is when rates were compressed as low as 4% on some of these
Mm,
deals. And there wasn't, to me personally, the deals, there wasn't enough. If you know how it works. If I'm giving so much money back to the investors, but what's left over still has to be worth my time, because I
mhm.
wasn't just doing this as my secondary deal. I had a full portfolio, and if I'm going to spend my time and go all in, it needs to be worth it. So I just started looking at other asset classes, and the first one we bought was an existing Class A center. It only had one vacancy, so it was sitting at probably 90+%. And we really learned, and we learned the harder way because it was new to us because we own the management company, but we brought the value, and we have brought the value to many of them by just better, in my opinion, better and stronger, more aggressive management styles. The
Okay.
commercial world is very much, they take the call, the response times aren't as fast. It's these commercial brokers been doing it forever. Nothing against that. Their way obviously works. But we treat it just like we would market a 3-bedroom, 2-bath brick home or a $700 apartment. We're on social media. We put it on Marketplace, but we're on the big places, LoopNet, Craigslist, and we're appealing to all of it. We run everything through a CRM. We have follow-up processes. So we just treat it a little differently. And then, a lot of times what happens, because it's important to notate that everything we do is in markets our size, so that 150,000 MSA or less probably. And there'll be, say, a retail center owned, but most of the time that is owned by a group that has centers or assets in much larger areas. So they bought this one, but it just seemed to us, all the ones we bought, it's been the same trend. It's owned by a bigger group, and this is just not, it's not important to them, or it's not the most important thing. So they have a few vacancies, and it's like, yeah, but we've owned it long enough, it's cash flowing, it's not a big deal. We'll go in, we'll fill the vacancies, and then we'll reevaluate these leases that they just weren't pushing. I mean, we had centers that we bought that they were $17 was their market rate. They were so far under market, it was insane. We immediately got them to $25, $24. So a lot of value add there. So we exercise that piece of it. I love the commercial aspect. I love the national tenants, but I love seeing when our team puts together a deal with even a local owner, just seeing that they're going to grow that business. And then we have some that have expanded to multiple locations with us, and now they have 50 employees
Yeah.
and their kids are going to the same private school my kids go. Just seeing that full transformation of life happen is phenomenal to me.
Yeah.
And then then we eventually got into redeveloping single use buildings, and we've been doing that now, where we buy a single use building. Like we bought an old Mr. Gaddy's. It was 27,000 square feet. It had been a Gaddy's turned into this church. It was sitting abandoned, probably would eventually been torn down, but it was just in a prime location. And we converted that. We put 2 anchor tenants in the back and 7 additional retail spaces in the front. And it's one of the nicest facilities in that area now. So that's been a huge play for us too. It's a lot of work. I'd rather, I guess you can compare it to converting the office to multifamily, right? This is a ton of work converting single use to multi. There's a lot of things that just it wasn't made for to do that. But when you get to the end of the road, I mean, the return on it is normally much better than taking an existing one, unless you just get a really good deal, you know.
Yeah.
So that's what
Yeah.
got us there.
So, I mean, a lot to go into there. So you mentioned when you're looking for these retail centers, the thing that is usually the value add is improving the management itself.
Yeah.
What is it? I haven't owned a retail center before. I know most of it goes into the leases. And so what is it about the management that you can really improve to increase the NOI? Because honestly, the NOI is really what we're always concerned about. So how do
Sure.
you increase the NOI specifically with management in strip center retail?
So multiple things. One, well, if there's a vacancy, fill the vacancy, right?
Right.
Done.
Yeah.
Make sure you're at market rate, right? Another easy one. But then looking at those expiration, getting ahead of it before the expirations come in, offering them to renew earlier, but building in those annual increases. And most of this wouldn't be something that's new to someone that's doing it. But one of the pieces that I feel is a real hidden gem there is that I don't think a lot of people care about, because it's triple net, right? So it's triple net. Most of ours are. So you're getting everything, taxes, insurance. It's easy to sit there and say, like, because if it was the multifamily project and your taxes go up 20%, you're like, whoa, this is a problem. Well, in a center, it's like, it's a problem, but they're going to pay me back. But the problem with that is now I need to go do a renewal. Well, if I fight and my team fights really hard to make sure that the lawn guy is the best option, we didn't go spend just insane, stupid amount of money repainting the side just because we know they're going to pay it back to us in the CAM reconciliation. So I'm going to fight really hard on all those. Now I'm going to lower their triple net, by $2. And because I lowered it by $2, I don't think they're going to stand out of the way when I ask for $1 increase on the rate.
Mm,
right? So put in a little work, lower the expenses that aren't our they're not going to our NOI anyway, right?
mm,
Now I can increase the piece that does go to my NOI, and I've earned the right to ask for that increase because I
mm,
fought for it over here.
mm-hmm.
So,
Yep.
um, and you just don't see it a lot. I mean, when we take these things over, I mean, these companies are huge, right? They have 10 times the amount of assets I have. Not knocking them. They've done something right. But on these particular ones, they just really weren't doing the best job,
Yeah.
for that they could have for the tenants, but it just didn't matter to them. And I think a lot of times because they've owned these assets so long, or they developed them originally 10, 15 years ago or whatever it was, and it's probably still pretty successful compared to, their cost basis in it.
Yeah.
Or I don't know what the reasoning is, but that's
Yeah.
been a kind of a hidden gem for us in it.
Yeah. Yeah. I really like that idea and that strategy. I always feel like, even with mobile home parks that we own, you, if the rates are under market, it doesn't mean that you can just go in there. I mean, you can, but I don't feel
Yeah.
like you should just go in there and boom, raise the rates, because from the tenant's perspective, you haven't done anything to earn that rent raise. And so I really like how you kind of approach it. You have to earn that rent raise, even if they are under market. The market rate has increased. You do have the right to increase the rate, but you need to, from the tenant's perspective, earn that rate. And I feel like that is a very good way to do it. Go in there, improve the property somehow, improve the tenant's experience somehow, and then that's earned. And when you do increase the rate, it's a little bit more, it's received better. So I like that. Your tenants, with retail, it can go all over the place in terms of who
Yep.
you're renting to. Is there anything specifically that you look for, that you try to lease the properties up with? Like, I'm gonna talk out of my ass here because I don't really know. Like lawyers, accountants, nail salons. Is What type of tenants do you look for?
I definitely don't have any lawyers or accountants in any of ours. They normally don't want to pay for the price of the retail if you look at it in like an office space. So we will occasionally get something that's more office space related, like A&M actually leases it's I don't want to call it a research facility. It's
Oh, Texas A&M.
Yeah, Texas A&M.
Got it.
So they have a space, and that's probably the most office-based one. Or we did a financial center. So we just filled a strip. I'll just run through it. So we have the joint. They're a chiropractor company. We have a dermatologist company in there. We have a financial, like they do not payday loans, but they're between payday loans and a bank. And then we have a nail salon. We have a hot works studio in there, and then we got a restaurant. And then we have one that we have a couple gyms in different centers in our portfolio. A lot of barber shops or nail salons mixed in there. Then some different food places. You'll get a liquor store, vape shop. We just did one where we leased. We took an old Blockbuster that was right in front of a mall. One of the
Blockbuster.
best. Yeah, I know. There's only one existing in the United States, and my mind wanted to make it the second one and sell tickets for people to walk through it. And my team shot that down real fast. But um, we had on one corner so far, we released the corners. We have a national optics company, and
Mm,
then we lease to a national, they're like the cable provider. It's their retail, so where they're going to sell cell phones in different pieces. So, but that was because of the location, and it's probably 35% more on your retail rate, on the per square foot rate than some of our other centers. So like that, when I'm being a little pickier, if like for instance, I have vape shops in plenty of our buildings. Would I put a vape shop between those two national tenants at that location? No, I wouldn't.
that was going
So
to be my question: is
it's a
do you
mix.
do you attempt to curate the makeup of the tenant base?
Yes.
Because in my mind, like a vape shop, a weed shop, something like that, they
Yep.
will bring the perception of the strip center down. And so I'm assuming
Well,
people.
it's you want the so for instance, like I'm not, and even to that aspect, like if I have a gym, right, do I want to go just slap like Freddy's fast food burger or whatever, I mean what it's called, this like I want it to be like they're gonna have to feed off of each other. It kind of goes the same
Mm-hmm.
thing about fighting for those expenses. It's easy to just go in there and go, well, they're willing to pay the money, they pass the credit check, I know they're going to pay the rent, put them in there and just screw everyone else in the center. That's great. But then if the guy doesn't get the business he needs because it's filled with nothing but like fatty cheeseburger places, and I put a supplement store in the middle, and no one wants to go over there, right? Like they need to feed off of each other. And
Mm,
if you're not strategic in doing that, or like we don't have first right of refusals, friends. We just had one where our anchor gym is. We don't have a first right of refusal for that gym, so I can put anything I want. I don't tie ourselves to it. Another fitness facility came in. We had two fitness facilities in a month looking at. One of it was an all female gym location. Would we allow it? Sure. They're not conflicting with a 24-hour gym. The next one was more of a for fitness facility that was for everyone. No, we're not going to allow it because they're going to fight each other.
Mm,
Even if they're both okay with it, I've been in business long enough to know they can't. I don't think they'll both survive. So
yeah.
we try to be strategic now. The way I look at it, and I don't still, I don't really take the calls anymore. But when I would take the calls, I told every tenant, like, we're going to be business partners in this. And they said, how are we business partners? Because my success of this center is directly tied to your success as a business owner. So when we sign this lease, this contract, we are business partners from here on out, as long as you are sitting here, and we'll do whatever we can to make you successful. That is a good deal for both sides.
Nice. Yeah, I think that's the right way to go about it. And it makes sense. I mean, if ever, you have five CrossFit centers or CrossFit gyms next
Yeah,
to each other, they're not going to be successful because there's not enough people who want to be in a CrossFit gym in the area to fill five of them right next to each other. So
100%.
yeah, that makes a lot of sense. I just took a peek at the clock. Unfortunately, it looks like we have run it down, so it's time to jump into the quick question round. Are you ready?
Let's do it.
All right. Starts with education. It could be any form, could be books, could be movies, but I need two specific recommendations. Could one for general life wisdom and then one for real estate.
Like books read, something along those lines,
Yeah.
conferences or
Yeah, or podcasts that you like or anything like that.
real estate related. I'm a big fan of Joe Fairless's Best Ever Conference and his podcast and everything about it. So
Nice.
if that's where I'm on right now, I would say, I go to a ton of them. I'm definitely more of a conference and podcast person than I am a book person.
Yeah.
Just in general business. I would say we're full into the EOS method. So anybody that's scaling a company, if you're not running on EOS, it changed our lives. It's still changing our lives. So that would be where I'd go with that one. The books, everything about it.
What is EOS?
EOS. It's called the Entrepreneur Operating System. So it's just a system, and they have books about it that teaches you how to run your business in a way that everyone inside the company is running their departments. They're accountable for it. Versus, it's really big for business owners that have their hands in everything. If you
Oh,
want to get your hands
nice.
out, putting the right people in the right seats so you can scale your business properly.
If they have a book, that's something I should look
They
into
have
because
tons of
that's
books for it has the dummy version all the way down to the in-depth version. Yeah, if you haven't heard about it, it'll change your life. Read it and then let's talk again once at some point.
there you go.
For
And I
sure.
like that you said conferences. Not many people mention it, but I am a huge fan of conferences. And I have not been to Joe Fairless's conference, the best ever conference. Haven't been there yet. I really want to go because I've heard good things. So next time I'll have to pick that one out
Yeah,
and
it's
head out there.
the name qualifies it. It's the best one I've been to
Nice.
for sure.
Do they only go over multifamily or is it also other assets?
No, so they have they go over different assets. They'll have different breakouts and speakers, and they actually have a day that's just for LPs that are there, like they host. So it's a lot of GPs there, but they go through tons of different stuff. It's a good event. It really is.
Cool. All right. Next question is for your younger self. Let's go back to the Brian who was just buying his first, I think you said single family. Go back to him, look him in the eye, give him one piece of advice moving forward.
Be more cautious on what you sell versus what you hold.
Interesting. You're the first person to say that. Go a little bit further into that.
I can't tell you how many things I wish I still owned or wish I would have bought, right? Like the old, saying best time to buy real estate is today. I mean, that's still true. And there's deals I drive by and I'm like, why did I sell that? Or I drive by and say, like, why did I not buy that? Like, I wish I've gotten into the long-term holding. Uh, I know we're running, but when I was flipping houses, my mentality was, why would I ever rent something out when I can go sell it and make X dollars today versus waiting so many years?
Yeah.
That was my mentality, and it was to me the way I sit today. It was a foolish one.
Yeah. Because of appreciation, because of, cash flow. Appreciation really though, especially for single family. It's crazy. In Seattle, I'm
Absolutely,
sure in your metro too. I when I was when I was first getting into real estate, I was looking at houses and they were like 250,000 or something like that. And I was like, oh, it's way too expensive. It can't be worth that. Now, 10 years later, they're triple that, and it's just
yeah,
ridiculous. All right, next
yeah.
question is about the US. It's a big place. There is a lot of opportunity out there. Give me the single metro you're most excited about investing in today.
So we love our area. Like I said, we're 2 hours south of Houston, in Victoria, Texas. We focus strictly on towns our size. We love the smaller communities that, population of 30 to 100,000, maybe a slightly bigger MSA surrounded by smaller towns. So, we're everything within a few hundred miles if you draw a circle. So we love the smaller town feel with zero desire to ever be in the big metros.
Yeah. Yeah. Big ones. It's hard to find good deals in the big metros. That's a problem. I would definitely buy a good
Yeah,
deal if I found one downtown Dallas, but you can't find them.
sure. Yeah, absolutely.
All right. Next question is about finding the deals. It all starts with getting in contact with the seller and penning that purchase agreement. So, what is your favorite way to generate leads and find new deals?
We definitely we work the broker network. I sign up for tons of it. If I see deals, I make it a point to when I see them, I call the brokers, I talk to them, tell them, oh, this isn't the right maybe the deal for me, but here's what I'm looking for in this market. I'll even call on stuff that's in a market we're looking at that has nothing to do with us. And I make sure that I take all the brokers' calls when they do those mass follow-up calls with you. I don't blow them off. I take the calls, and then because of our history, we have a full-blown acquisitions team though too, which makes us a little unique. We have a full team in the office that all they do is research, lead intake, acquisition. So we'll identify assets like, okay, search, it's prop stream, whatever, let's search this, and this, and then let's contact the owners. But I don't care if I'm direct owner or through a broker, if it's the
Yep.
right broker. I feel like they bring it. We're not looking for necessarily the steal. If they bring it a realistic deal, we're all over it. So sometimes a broker can make it a little bit easier than when we're working direct with seller.
How do you find the right broker? And this is just kind of, we've been focusing on bigger metros, but the smaller metros surrounding big metros. So, small metros around DFW, around San Antonio. Um, and it's really difficult to find the right broker that works in those areas. How do you find the small town brokers that focus on the commercial side of things?
Yeah, so normally I look at someone that has something in the deal, or I'll go pull closed history and see who has closed deals here, because they're normally be the ones. And it's tough right now because all these brokers have started hiring all these young guys, and they just churn and burn them. It's like, oh, get as many deals as they can, and then and those are the ones that call you and they use the big words and do all these follow up calls. And I work through them because you never know, because they're making those same calls to sellers too, right? And eventually they're going to get someone on the hook, and then they're going to remember, oh man, that guy Brian was pretty nice. I'm going to call him. He likes these markets. Let me see if he's interested. And we get those, and they'll say, hey, I got this deal. Are you interested? And like one of our second centers, I bought the first center from a guy who came from our loan brokerage relationship with Marcus and Milchap. And he came down on the day of closing, and I mentioned another center, and he was like, oh, I actually went to college with the owner's son. I know that group. And I was like, well,
Small
do they
world,
want to
right?
sell it? And then boom, 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 we put that deal together. So it is the US is a big place, but it's a small world.
Yeah. All right. Next question is about lessons learned. Not every deal that we get into goes the way we expect it. In fact, many times things go wrong, but that's when we learn the biggest lessons. So, what was a deal that went a little sideways for you? And then what was the lesson you pulled from it?
I mean, there's been a bunch of them. The general one is just I would say, the ones we've got into that were outside of our realm, getting to something we didn't really know. Like I said, we did that years ago with a bowling alley. We bought a laundromat. Bowling alley was not successful. The laundromats were extremely successful, but the time it sucked and took from everything else, because you're having to relearn something. It's not saying you're not capable, but and then we've definitely, and I would say the biggest one is doing all your due diligence in the beginning. We had a multifamily we bought that had ghost units in it. We thought we had done every inspection. We looked at every unit. Well, then between then and closing, we didn't go back and rewalk them all again. So now we walk and then we rewalk, which is brokers get very unhappy about that.
Mm,
But we ended up with bunch of ghost units. Then we brought attorneys in, and the attorney said, well, you can sue them, but it's just going to cost you more in attorney fees, and than you're probably ever going to get out of it. So just really doing your due diligence research up front, and being fine tuned on that is extremely important for us.
yeah. Yeah. The due diligence. And it really is helpful to have a really broken out checklist, at least I've found for due diligence,
Oh
because
yeah.
so many times you think you go through the big things and then you have to go through every single step because you never know when the red flag is going to pop out. And it could be
Yep.
just the most obscure thing. And if you got that checklist, you'll go through it. But if you don't, there's a good chance you might miss a step. And that's when things like that pop out. So,
Yep.
um, All right, next question is about raising capital. It does take money to make money in real estate. That is a fact. So, what is your favorite way to raise capital?
So raising capital, I mean, again, we've only been doing it a few years, so I'm not as experienced as a lot of other guys are. But I like to talk to everyone. I like to talk to everyone. All mine's on a personal basis. I mean, we do run some socials and stuff, and I'll get a few investors that way. But almost all of them I have are through referrals. I ask for referrals from our existing investors, and I just have general, candid conversations whenever anywhere I go. And if I think someone can be a good fit, I'll bring it up. And if it's not something that appeals to them, I move on. But I like to I have a personal relationship with every single investor we have, and most of everything we're getting now is coming from referrals or family or friends. So that's very direct approach. I'm not really into the mass. Let me get 100 leads and mass call them and just get 25 grand from anybody with a pulse in the world.
Yeah. Yeah. It does turn into a very long term relationship because if you, if you get an investor in, family and friends, whatever, and you get them a return, they're going to have a positive experience with you. They're going to want to take that return, put it back into another deal, and they're going to talk to other people that they know and who also want to have a return on their money. And so eventually it just kind of builds on itself. But it does all start with that relationship, and that's what real estate is about: is building those relationships. Which brings us to the very last question. I'm sure people want to reach out, get in contact with you, start a relationship, learn a little bit more about your guys' company. So this is a two-parter. Where can they find you? And then what can they expect when they reach out?
So you can find me our website, altunascapital.com or fergmar.com. Best is probably altunascapital.com, and then you can click the contact us there link. You can find a few things from me. If you're looking to invest, then we'll talk through who you are, what you're looking for, what your goals are, and maybe if that aligns with our group, our organization. But I also am very open to talking to someone that says, I have no idea what I'm doing. I want to get started and I just want to just have a conversation. I love having 30-minute hour conversations over a cup of coffee or over the phone. Just if I can help someone out get there, I've been doing this long enough. I'm not in I need everything to be mine phase. So if I can ever help anyone, I'm always happy to do it now.
Awesome. I will put Brian's link in the show notes. So if you guys want to reach out, just click the little more in the description. It'll pull down that full description in there. You can find his link. All right, man. That wraps it up. Thank you very much for hopping
Awesome.
on the show.
Yeah, I appreciate you having me.
Absolutely. For everybody who's with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions, reach out to me, Gabe at the realestateinvestingclub.com. If you guys want to support the show, just give us a review on probably Apple is what you're listening to this on. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode.